All right, so Friday we had a fairly major sell-off in the market. And it's pretty easy to see as we look at the NASDAQ 100 on a 1-year daily chart what happened. We formed an oops pattern, first of all. On Thursday, the low was 47.9122. And on Friday, the high was 47.73. Now, let's just see here. Yeah, 47.9122, 47.73.77. So there was an oops pattern, which is essentially a gap. We know from our trading experience that approximately 93% of the time, the market will cycle back higher and do what we call satisfy that oops, mean it will close that gap. So what that means to me is that at some point it will trade back higher up to the 47.91 range. And even if it is uh, starting to trend lower, it's not at all unusual for it to cycle higher before then it turns and heads lower. So that's one, call it a magnet, that may be drawing the price back higher. And I do see, and we're going to show this here in just a little bit, I do see on the Able Trend 3-9 minute and 5-15 minute that we've been showing today some double stack patterns to the upside. So we won't get too much into that right now. We're not double stacked on NDX 3.9 right now, but we are on 5.15. But we'll look at that after we're done with the bar charts. So what I wanted to emphasize here, because I think that this is a good lesson for anybody who adopts my philosophy of using the bar charts for a macro view of what's going on, and using that then to help determine what type of strategy you want to trade. Maybe you use it to determine that you want to sit on the sidelines for a bit and give the market an opportunity to show you exactly what it wants to do and when. But regardless of how you use it, I think it's valuable in recognizing how these patterns shift. We know here at Options Moneymaker with absolute 100% certainty that patterns shift. Once you complete a rising pattern, there will be a sideways or declining pattern following it. If you complete a declining pattern, there will be a sideways or rising pattern following it. That's just the nature of the markets. That's what they do. And you can look back over any time period and very easily validate that. Some movements higher are more significant than others, and some movements lower are more significant than others. But we follow what the market is telling us, and that's what we try to do. So what we've been talking about here for a few weeks is the rising pattern that started on the 28th of June. And we didn't know where that was going to conclude. We knew that it would finish at some point. We had some clues because of longer term levels of resistance. When the index started forming new all-time highs, that all by itself can act as a natural level of resistance. So we had some clues that it might be stalling out, but that still didn't tell us exactly when we might make a shift. We can now look back historically and we can see at what point in time we pretty much shifted into a sideways pattern. You can see the rising pattern, which consists of higher highs and higher lows. And then you can see a series of price points that, for the most part, the highs were flat in a parallel line. One of them was on the 15th of August. One of them was on the 23rd of August. And the third one was on the 7th of September. All three of those price points were natural levels of resistance that the market formed. So when I say a natural level of resistance, it just means that the market moved up, could not continue moving higher, and then stalled and moved lower from there. It forms a level of resistance, and then we capture that level of resistance using our channel lines so that we could perhaps identify a level of support that's parallel to that. We could identify at what point in time it started, where it could project out to. Now, one of the reasons I like having the channel lines out there, defined by these three tops, and then a parallel line which is capturing the lows, is I can very quickly see when we're breaking below that level of support or breaking above that level of resistance. When we broke below that level of support on Friday, it was the first strong indication that we are no longer in a sideways trending pattern. We definitely were no longer in a rising pattern, but we'd already known that because of the formation of the sideways pattern. But Friday was the first clue we had that we're no longer in a sideways pattern. And today there was follow through on that and confirmation. But now today we formed a natural level of support. And what that means is we hit a price point at a low and then we moved higher from that. So we actually opened at the low this morning. The open was 46.56 and that's the low of the day. And then we've moved higher since then. Now that by itself helps us start to define where we might be trading in a declining channel. I think it's a little premature to actually identify the channel yet, but that doesn't stop me from just placing some lines on my chart and bordering my channel with a natural level of resistance and natural level of support. Now, the angle of this channel may change in the coming days. The width of this channel may change, but that's kind of a starting point for me. And what I did was I backed up and I grabbed this price point here. Now, someone might ask, well, why would you grab that price point? It seems rather arbitrary. It does on the surface seem arbitrary, but I'll tell you exactly why I did so. When I go back and I look at the rising channel, and I have this whole series of higher highs and higher lows, then I formed this bar right here, which was a lower low than the previous low, and then this bar, which was also a lower low. So now I have two consecutive bars that have lower lows, and it was after this natural level of support that the price moved higher. So I knew that that was activity that I could pay attention to, and then when we formed the low today, I tied back to that price bar that was that low because it's really the first identifying low after the rising cycle. So like I said, this may or may not remain the angle of the declining cycle. We might not remain in a declining cycle, but as of right now, it's clear to me that we are no longer in a sideways pattern. We're certainly no longer in a rising pattern, and we're seeing the first formation of what could potentially be the next longer term declining cycle. Now, I don't know how long term is. Long term could be a few days, long term could be a couple of months. I don't know how long this channel will stay in place. I will evaluate it each day and do the best job I can to assess where this might be taking us. I'm going to take this channel and I'm going to extend it out because that way I can start to see some other practical price points that we could potentially reach. So for example, if in fact the angle of this declining channel is valid, then it projects out to intersect the next rising level of support, which is this whole pattern that we've been in. Starting back in February, we've been in a rising channel. Last time we touched down to the level, to the low at support was on the 27th of June. So if we were to come back down to that same level of support, and if we were to stay in this declining pattern, the convergence of that rising support and declining support would occur somewhere around the 44.37 price range and would occur somewhere around mid to late October. October 21st is the exact date based on the current pattern. But as I said, that is subject to change based on how the price points continue to develop. But it gives you a reasonable probability of where the price could be moving to. You don't have to be holding your breath, second guessing, trying to speculate where the price might go to. And yet it may not go there, folks. It may not go there. This is one of the many possibilities. The other possibility is if this pattern is valid, we actually could trade back up to resistance, which would be around the 47.98 range. It would depend on when we would hit that number, but just call it just under 4,800. So what happens in a lot of situations is people will get very excited about a big move down or a big move up, and then there's a retracement of that pattern. And it's a significant enough retracement that they get spooked. They no longer believe that the pattern is valid because they haven't really done their homework to identify the parameters of that pattern. They haven't done their due diligence to recognize that it would be a natural movement to see NDX move right back up to the 4,800 range, and it would still be in a declining pattern. After that, depending on when it would occur, you could see the index moving down to the high 4,500 range. So the range in this channel is about 169 points. That's a pretty significant range. Today, all by itself, with the low at the open of 46.56 and us trading up to a high of 47.32, that's a pretty sizable range. We have almost an 80-point range today. That's a pretty significant range. And one of the other things I want to point out is it should not at all be a surprise that we bounced back higher. And there's one primary reason for that. Huge Bollinger Band snap pattern on Friday, where we traded below the 3 standard deviation daily Bollinger Band, and follow through today. Now you could have traded a rising bias trade here to take advantage of that, and the index might have continued moving lower. That's why you always give yourself time in the trade, and you always give yourself plenty of a forgiveness factor. It could have continued to move lower. But typically when you see a Bollinger Band snap pattern that is this significant, and by significant, I mean it's below the 3 standard deviation Bollinger Band, and then there's continuation of that. When you see that, that, in my opinion, is a good, solid, tradable pattern. Now, I'll be very honest with you, I didn't take a trade today based on that pattern. And it wasn't because I didn't see the signal, and it wasn't because I didn't trust the signal. It's because I was preoccupied with making some adjustments on some existing managed trades. And so that actually consumed my attention. Now, in hindsight, I wish I had focused my attention first on taking a rising bias trade based on the Bollinger Band snap. And I feel very confident trading the Bollinger Band snaps because of the experience I have with them and the number of those trades that work out so nicely. But I'm a human, I'm a trader, I've been doing this for over 30 years, but I still sometimes make a bad decision. And the bad decision I made today was I was focusing right from market open on some of my managed trades, looking at how I wanted to make some adjustments there, instead of taking advantage of a very clean, in my opinion, opportunity to get in based on a Bollinger Band snap pattern. Now, even if you had traded this on Friday, which I would not have done and held over the weekend, but even if you decided to open a rising bias position on Friday based on the Bollinger Band snap, you would be out today and you'd have a very nice profit. Even if you got in at the lowest low on Friday, 46.81, with us trading up to 47.32 today, you'd have a very nice profit on that. So my summary of NDX is clearly we're no longer in the sideways pattern. We may now be in a what looks like it could be a longer term declining pattern which is just the natural course of trading on NDX, rising, declining, rising, declining, rising, extended rising pattern, sideways, perhaps declining, but we're going to have to wait a few days to assess whether or not the angle of this declining channel is valid, and we need a few more price points to validate that. A few more price points would be maybe a couple more natural levels of support, or possibly a move higher and we form a natural level of resistance that either alters the angle of this channel or it validates where we have resistance placed. And then we have a channel that we can project out, and we can use that to our advantage on our existing positions, as well as if we have other Bollinger Band snaps, we can take those trades with a high degree of confidence. Let's take a look at SPX. SPX is, you know what, let me just back up to NDX a minute. I want to just share one thing with you here. Sometimes it's a little easier to see when you get down to the shorter time periods, because you've got greater degree of granularity in terms of the bars and the placement of those price points. So here's the one low today, and we've got our level of support coming across that. Here's where my low was previously that I attached to, and on the 60-minute you can see it's not just a single price point, it's actually two price points that formed a natural level of resistance that's a declining resistance. And of course, if you got down to even a 30-day, 30-minute chart, you're going to see a greater degree of detail, which helps you fine-tune the placement of your pattern. So let's go back to the 1 year and look at SPX. So SPX, first thing, Bollinger Band snap on Friday, big Bollinger Band snap. Follow through today on that Bollinger Band snap, and natural level of support today. Now, I've got natural level of resistance that's all declining here, and the angle of decline appears to be valid based on those levels of resistance. So what I'm going to do to start out with is I'm going to take off the extension, and I'm going to make just one quick adjustment, and that's going to be to just pull the channel down to capture today's natural level of support, but I've decided to leave my resistance as it was across these three tops. Now, when you have three and more tops, it gives you a greater degree of validity of the channel, and it's easier to identify the angle. I only have one bottom here, so I'm still not confident that this is the right pattern, but as of right now, that's what I'm going to leave in place. Bollinger Band snap, good follow through today. The low at the open was 2120 today. I actually moved down to 2119. That was the low, and the high is 2145. So real nice move to the upside, all based on that Bollinger Band snap. Good pattern opportunity. Could we move all the way back up to resistance? Yes, we could. That would put us back up around the 2185 range. Could we just drift back lower? Yes, if this support is valid, that could put us back down around the 2118 range. So we're going to just give this an opportunity to play out and see what it's doing. But clearly, in my opinion, SPX has moved from a overall rising pattern to a declining pattern, and we don't know how far that pattern will decline yet. But we can project it out just like we did on NDX, and we can get some idea of where it could possibly be going. RUT, has been a little bit different animal than the other two indexes. It never shifted into a sideways pattern. It's been trading in a rising channel, and there was a more narrow cycle that it's been trading in since about the 12th of July. So this cycle is where it's been trading, but it looks to me like we've drifted now below that cycle, and we could possibly be forming some sort of a declining channel. Not as significant of a Bollinger Band snap on Friday, but we definitely had one that was nicely tradable today. I hope some of you took advantage of that. We really encourage you to think like a trader. Don't just sit and wait for us to trade, but take what we've talked about through all the time that you've been in the trading room and search out some of your own trades. I hope some of you took advantage of one or more of these indexes in the opportunity this morning. I'm personally a little disappointed that I didn't take advantage of it. As I said, I allowed myself to be distracted by some other things, and that's a natural thing that's going to occur when you're a trader. There are a lot of things that are competing for your attention, and you just have to be patient with yourself, and you can't allow yourself to get frustrated if you choose to focus your attention somewhere else, and that did not end up in hindsight being the most productive way for you to grab profits. I'm just going to take a quick look here at RUT. I see this low here, and I'm going to attach to that low. And the reason I'm doing that is because I see that it comes almost perfectly across those two natural levels of resistance right there, these highs. So that's a pattern I'll keep an eye on. That tells me that we could trade back up to 1264. We could trade back up to 1256. So I've got multiple patterns that I'm tracking here. And the one that I just identified is the one that actually seems to align most closely with the Bollinger Bands. And for me, that is a validation of whether or not my channel and cycles have any integrity to them. I want to take a look at Amazon because there was an opportunity last week, Bollinger Band snap pattern. And I'm highlighting these Bollinger Band snaps, folks, because it's the one trade signal I take off of my bar charts. I don't take any other trade signals for my active trading off of the bar charts. I'm looking at the Able Trend charts for the majority of all my trade signals because they're going to be the most reliable and most profitable trades you can make. It is the Bollinger Band snap pattern that I look for on the 1 year daily charts on my stocks and on my indexes. And there were some nice opportunities last week. Price line moved down to the lower Bollinger Band today, not a snap pattern. Looks like it might be shifting its pattern a little bit. Let me just make a modification here. So coming across today's natural level of support, need to just do a quick, there we go, and tying back to a level of support that occurred on the 16th of August. And then, of course, we have this natural level of resistance. We also have this one. We're not tying directly to that one, but you can see that it's pretty much aligned with the same slightly rising pattern. Natural level of resistance here, one here, and one here. So a price line, could move back up to its own level of resistance, 1463 range. We'd have to break above the Bollinger Bands to do that, but that certainly is not at all out of the question. Just a couple of other quick stocks here. Google had a nice Bollinger Band snap pattern this morning, trading below the 3 standard, trading down to a low of 754, up to a high of 767. That's a very nice opportunity for profit. I'm hurting myself as I'm looking at these and reminding myself that I saw all these this morning, but I chose to spend my time and attention on other things. And then ISRG, Bollinger Band snap on Friday, little continuation. today, and then follow through on the snap from a low of 673 to a high of 681. Nice profitable opportunity there. So we've seen some nice Bollinger Band snap patterns. As I said, I hope many of you have taken advantage of those and gotten in. Those can be quick profits when they occur. Many times, although not all the time, those Bollinger Band snap patterns give you a profit within the same day, and sometimes a day or two. But generally, they're pretty quick profits that give you opportunity. I see that ISRG could trade up to 695 if we move back up to resistance, and that wouldn't be a surprise because that channel aligns almost perfectly with the Bollinger Bands. This is a cycle down. We could have a cycle up within this range. We'll just have to wait and see and look for our opportunities. I'll be looking at some of these stocks and indexes later for the potential of some new positions. I've not taken a lot of new positions other than iron condors in the last couple of weeks because we're trading in a sideways pattern, as you saw on the indexes. So I took advantage of those. And now I want to see whether or not we do continue to move higher and which of these patterns ends up becoming valid. So Michael, can we just take a quick look at the Able trend charts and see what they're doing and how they correlate to what we're talking about from the bar charts?
Sure. Give me back the screen control. I'll just take it from you. I'm sorry. Here we go.
I think it's very important to understand that the bar charts do not conflict with Able trend. On the surface, until you dig into it a little bit, it may seem that way. But here's what I've seen happen before. There could be a series of declining red bars on an index, and it shows a double stack to the downside pattern. And on my bar chart, I might have a lower Bollinger Band snap pattern. Now, the Able trend might lead you to believe that we're just going to continue lower. But I think it's important, and Michael, I'd love to hear your thoughts on this. I think it's important to pay attention to, even though we have a double stack to the downside pattern, how far away from resistance are we pulling? Because you're really good at pointing out a sweet spot trade, and the only reason a sweet spot trade develops is because there's retracement back up to resistance or retracement back to support in a rising pattern. And that's the point I want to make, that potential retracement back up to resistance is actually in a correlation to the Bollinger Band snap from the bar chart. So I was talking to some members of my team last week, and we were talking about what may on the surface appear to be a conflict. I generally don't hesitate to take a Bollinger Band snap trade on the bar chart, regardless of what Able trend is telling me. But when I go look at Able trend, it's apparent to me that there is a correlation, not a signal, that we're going to move higher on Able trend, but a correlation that we've pulled quite a ways away from resistance, declining resistance, and it would seem natural for us to move back up to that level of resistance. So that's, I think, an important point to understand, that it's not a conflict. It's not a difference of opinion between the two different charts. Michael, what do you see going on in Able trend?
Well, on the 3-minute chart, this is the second commentary in a row that you've cost me a signal again. So I've got to blame somebody. I've got to blame somebody for this buy signal right here that I had.
I don't understand why you didn't take that signal.
Well, I can't listen to you and run my calculator at the same time. Okay, it's like chewing gum and walking. Okay, I'm sorry. I just can't do it.
Multitasking is a challenge for you.
That's right. That was a wonderful buy signal there, by the way. But anyway, it had a 5-point risk, and it ran 8 points. That's
But
great.
tell us why that's a great buy signal.
Well, you'd opened up your trade at 47.29, and let's just call it 47.30. Well, your risk, that's less than that really. It's your risk is only about 6 points,
Okay.
which is fairly, that's decent for me. I'll take a 6 point on NDX any day of the week. I mean, I like that. I like that risk.
So it's great
So,
risk, but why is that a good buy signal? Why would you have
oh,
taken that signal?
well, because you had a buy signal, the blue dot on the blue bar.
Hmm. And
Definitely, and we got 3 minute. Now we're not double stacked by no means yet, but it's been support has been printing. It did move up, so that would be another sign for me to say, okay, this might be a good signal here because you've got 9 minute and you got 3 minute for sure.
mhm. Okay.
Yes,
So
but if
right now we're double stacked to the upside.
yes, we are. We are double stacked. Yeah, got double confirmation. Actually, got triple confirmation if you want to count these blue bars as being triple. So
Hmm.
that was a nice sweet spot trade right there too, for sure. So I don't know what the risk would have been on that. I mean, you're talking about 47.37 down to 47, probably 29. That's getting out of my range a little bit. But
So are you going to send me an
anyway,
invoice for having missed that trade?
oh no, I'll just hold it over your head for a couple months.
Okay. All right.
That's all. I don't.
A
Yeah,
couple of months.
a couple of months, years. But if you look at the 30-minute, 90-minute chart, just go right to the next time frame below, you can see that we're in a downward bias. Of course, it was Friday. Now it's trying to pull back up, but you got resistance here at 90 minutes. So and it's continued to print throughout the day. This one will print at 130. More than likely, it'll print again. So we'll have to wait and see. But it still shows weakness, in my opinion.
Now, Michael, that's a great example of what I was just talking about. The first bar of
Yeah.
the day on that
Yes.
30 minute was a green
That's right.
bar, right?
Yes. Yes.
So it moved lower, but it was a green bar. So if you saw a green bar on Able Trend, it's not a buy signal, but
No.
if correlating to that you see a strong Bollinger Band snap pattern on your daily bar chart, to me that all by itself is a signal to go ahead and take a trade bias to the upside.
That's right. And the more you talk about it, the more sick I get, like you did a while ago, because I was focused on something else also. But we had a 40 something point move off that Bollinger Band snap this morning. That is just, as I say, that'd been sick if you'd have gotten that trade and held that trade.
I think
It would have
I
been.
I think I told you that you should get into
You
that.
did. You did. And I'll have to admit that I fought it. I said, you know what? I think he's lost his mind. Thought you maybe swam too much this weekend and got tired. I don't know, but still. Anyway, but so that would have been an unbelievable trade there. I mean, unbelievable. And like I said, I will pay more attention to the 1 year daily. Uh, Trust me,
But but
I
those
will.
trades. So I also want to make this point. It's not like that's the only time that pattern's ever going to happen, and we just missed that opportunity.
Right,
You
right.
might have missed that one. I missed it because I consciously made decisions to focus on something else. But that's okay. Those types of patterns are going to develop over and over and over again, many times.
Yes, yes,
So it's just the type of thing that you pay attention to this, you learn from it, you make a decision each trading day where you want to focus your attention. You may, I may choose to focus my attention next time this happens differently or the same as I did today. Whatever the outcome is, it's my outcome. It's what I decided to do, and the outcome related to that, I own it.
yes.
So
That's
it
right.
is what it is.
That's right. That's right. If you move over the 60-minute, 90-minute chart, I mean 60-minute, 180 chart, we've been stacked down, Friday, but now today, to me, on this chart, we're a little flat today. I mean, even though it's moved up a good bit, but you can see that the 60-minute resistance level, we broke through that. We're sitting on 90 right now, so we'll more than likely it's going to print again today. We'll still have more resistance, but it might not. I don't know. I just really quickly go down to the daily chart. You do have a buy signal right here for sure at 10 o'clock this morning, but we're double stacking on the daily. We got, I'm sorry, not double, but we got two sell signals, resistance levels right here on Friday and now today, and it looks like it's stair stepping lower. So I don't know. I wouldn't take this buy signal to the upside because of that, and it'll probably print again tonight. And so I think the overall weakness still I believe that.
Well, so that um, resistance is printing at 47.92 range.
Yes.
and we're trading at what, 47.35.
Yes,
So when I look at the bar charts and I was showing the channels and cycles, and I said we could trade back up to resistance, it wouldn't be out of the question for us to trade up to that level of resistance, and
that's
that
right.
that could be a good rising bias trade. But I'm with you that I think you want to be a little suspect and a little cautious when daily resistance starts printing. There's there's a lot of weight to the downside, and you want to be very
Yeah,
conscious of that.
most definitely, most definitely.
Because this doesn't guarantee that we're going to trade up to resistance. It doesn't
No,
guarantee we're going to trade up to my line of resistance. It just means that we could have a rising cycle within the boundaries of a declining channel.
that's right, Mark. And several times, folks in the room have often listened to me when I say here's a buy signal. I have enough room to make the profit I want to make before it gets to resistance. Sometimes it's 9 or 10 points, and I'll take that trade. But on a daily chart, the risk is just so huge here. I mean, you're talking about almost a 60-point risk. So I wouldn't take that trade right there personally. That's just me because of the risk factor. That's all. Because it did pull back.
Well, now that I have access to your account, I'm happy to take that risk for you in your account.
Anything you need, you know
Okay.
that.
All
Anything you
right.
need.
Good. 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 All right. Let's take a
And
quick look at SPX.
okay, SPX. It's going to look basically the same. It's almost mirrored the same, except for yeah, there it is, just printed here at 12 o'clock. Okay, yeah. So basically, you can see the 3 minute, 9 minute still moving to the upside. That's all. It's got triple confirmation. Really, all three of them are blue. And then the 30 minute looks exactly like the NDX. I mean, it just looks like it's going to run out of steam here, and if it continues higher, it's got to break out of this. And so I don't see that happening. It could, but just I'm just looking at my other charts. We've got too much resistance in our way, and this one also the 60 minute 180 the same way. It's you actually have double confirmation on the resistance. So you got 60 and 180, and then the daily chart looks just like the NDX. You got a buy signal, but you got resistance. They're stair stepping lower. You can see that. So I think we might get another print on it tonight at midnight, and then we'll see from there.
So let's look at the 3-9 minute. We're double stacked to the upside.
Hmm.
That would mean that if we pulled back a little bit, it's a blue bar right now. Maybe if we
Right.
pulled back a little closer to support, you might have a good rising bias position. People
Good.
don't need to be afraid of taking those trades because you've got very short-term indication of rising bias, and we know that it would not be out of the question at all to have a rising cycle within the declining channel that we've identified.
Right.
But here's where I want to issue some caution, and that is choose your strategy wisely. So you can go, so if you want to buy a long call, that's fine. You can go out of the money, you can go at the money, you can go in the money. I personally would not go in the money. I might go at the money. I more likely would go out of the money to buy a long call. And the reason I would do that is because with the other three time periods, and we saw this on NDX, all showing pretty strong resistance, if I was not able to close out of my long call for a profit, I know that I could, out of the money, sell to open a call against it, cover it pretty quickly, convert it into a call credit spread, and basically convert what would start out as a rising bias trade into a declining bias trade.
Right.
So that's one way to think about how to position yourself. If you go too far in the money, you can still convert it to a declining bias trade, but now you have a declining bias credit spread that is in the money, and that's not really where you want it to be.
Right.
Things climbing a little bit now.
Oh yeah. Yes, it is.
So, but I think that emphasizes the point right there. The short-term signal is what you ought to be trading off of, in my opinion.
Yes.
That short-term signal, because look, there you would have gotten into that and out of it for a nice profit right now if you're day trading.
Yes.
Um, and the longer term signals, it's so important to be aware of those. Um, it's again, it's like that Google Earth program that If all you ever see is what's in your backyard and you never see what's around you, and you use Google Earth, you can zoom out, you can have a bigger perspective. It might not alter what you choose to do, but just being aware of what's around you, being aware of what other factors may influence, in this case, your position or this pattern, I think it just makes you a more successful and more knowledgeable trader.
Yes, agreed.
All right, RUT.
Of course, I think they like the news what they're talking about that the Fed's here. But anyway, you can see the 3 minute is through the second deviation, third deviation Bollinger Band here on the Abel trend chart. So buy signal was right there with the rest of them, the NDX and all the others. So then the 30 minute, 90 minute looks like there's been support. It started printing here at 12. I noticed that a while ago, and so we're still got resistance here. So I'm not sure if we're going to go higher here or not. 3 minute says we are, but the longer time frame says we're not. 6180, you've got double confirmation. Got resistance at 1227, 1234 range. And then on the daily, we hadn't stacked down on it yet. It didn't print over the week this morning. And there's a buy signal as we speak on the daily. But you got resistance. It's quit printing. I'm sorry, it's still printing here. But if this buy signal is valid, then all that goes away, and then you could take that trade to the upside because there's no resistance except for the 6180 and the 3090.
So now that I see the 3.9 having pulled up above the 3 minute upper Bollinger Band, I wouldn't be surprised to see it move back lower. Maybe not on the next bar, or maybe not immediately, but that also corresponds to the 30-90 minute and to the 6180 having met a level of resistance. But we could continue to climb here, and we may break out above that level of resistance too.
Yes, most definitely.
And I see we just printed 3 minute support and stepped quite a bit
Yes,
higher.
that's right. That's exactly right.
Okay. Well, Michael, I appreciate your analysis on Able Trend. You really are the subject matter expert on Able Trend, and I think it's beneficial for everybody in the room and anybody else who's listening to understand that it's important to blend a sophisticated set of signals, uh, such as are presented on Able Trend, with a very simple global perspective, macro view based on your bar charts. And that will educate you to a point where I think you're going to feel confident about taking trades. It doesn't change anything, folks, about the fact that it's very important to manage your trades. It's very important not to overextend your capital. Just because a trade is presented doesn't mean that you want to take it. The signal might be great, but you might want to take a pass on it because you've already got rising bias trades, or you already have more trades than you want to have in play. So play all of that together and just continue to learn how to be a successful trader. All right, Michael, thank you. Appreciate
No
that.
problem. My pleasure.